Hi, guys. Welcome to 5 Investment Friday. Greg Silverman, CIO, is over here. I get a lot of people requesting for a quick overview, a real quick overview of some of the investments that we like and are looking at, and they are private investments, so this is for accredited investors only. So I'm going to try and make it as brief as possible. I know this is not a detail-orientated video. It's really just something to show you what we're looking at, and if you have any interest, just give me a shout out. Okay, let's put on the timer, and here we go. The first manager is Umbono Global Mining Fund. Umbono is actually the Zulu word for hope, I believe. It's run by Rob Gerhardt and Alison Turner. Alison is based in London. She's an ex-BHP sell-side analyst. What we like about Umbono, it's focused in the metal, small junior miner, metal and mining. So this is a liquid, long biased hedge fund, and they're playing in a space where it's not well trafficked. So that's always something that we like. They've got this unique approach of analyzing commodities from metals, that is, from a top-down perspective to see what global supply and demand looks like, and then bottom up, as in what ore bodies are out there to provide that to meet the demand. So they're able to determine cyclically which commodities are in cyclical deficits or surpluses, and that drives the long and shorts. And then based on their knowledge of the industry and people they know in the industry, they're looking to pick off some ore bodies that are well developed, close to production, and obviously the big inflection point is when those ore bodies move into production, or define more economic feasible ore bodies and the like. So they're very good at what they do. It's a very capacity constrained strategy, and it's done great for us. We were very early investors, and I see down there the strategy has delivered fantastic returns. So that's Umbono Global Mining. Next one we've got is CBD Capital Group, and CBD Capital Group is out of San Diego, run by David Metzler, who is an ex-venture capital guy. So CBD, everyone knows about CBD. It's out there, and a lot of people glaze over. Here's the way it works. There's about 6,000 brands of CBD out there, of which 100 of them are making more than $1 million run rate. So we're kind of voting with our wallet, in the sense that if somebody is making more than $1 million selling a brand of CBD, they must be doing something right compared to the rest of the space. Now, where David and team's magic comes in is they are essentially rolling up CBD brands and trying to construct a group that was going to do 5, 10, maybe 20 million in revenue. And it's a bit of a financial engineering play, in that you can acquire companies at a lower revenue multiple than what you can bundle them up for and sell. So it's quite simple from that content. What we like about the approach, amongst other things that David brings in his VC arsenal, is the kind of what they call the two bites of securing a deal. Bite one being dating. They purchase a small stake, so i.e. think of that as very low cash upfront to get into the transaction. Funds are used primarily for marketing, execution, inventory, working capital, etc. These are small companies, and they need help, as most small companies do. But once David and his team are in there, they're actually getting to see a lot more than what they feel like they would normally do, and that makes common sense. And then they have an option to take a second bite, the prenup or marriage, taking a majority position and consolidating it. So they are, I believe, on their third transaction now, and they're rolling up pretty nicely. And we're strategic investors with them, and love what they do, and really have a good, promising outlook for them. The next one is Sasson Cove Partners, a very interesting special opportunities fund, uranium focused. So let me just go here for a second. Now, uranium is also a dirty word in a lot of places, but as the world moves towards a more or less carbon-based fuel source, there is only one technology at scale currently which can meet or replace fossil fuels, and that is, for better or for worse, nuclear energy. Now, there's been a huge boom in the supply of uranium for nuclear power plants, and that came about in the early 2000s to probably about 2007, 8. a time period when uranium just absolutely, the price of uranium absolutely crashed. Now, the interesting part about uranium is you can't run a nuclear reactor without it. And so the power plants are somewhat agnostic as to what they're willing to pay, as long as they can get their feed source, their uranium, to keep the lights on. So what happened is uranium went through a huge boom bust cycle. It's now or seems to be bottoming out from the bust cycle. There's very low capex spending. There's almost no new mines being opened or operated. And so Sachem Cove is run by a gentleman by the name of Mike Elkin. And Mike comes from the short selling background, hedge fund short selling. So what's interesting to us is, when a short seller looks at something and decides it's a good opportunity from the long side, that speaks volumes to us. And Mike will talk to you ad nauseum about nuclear power, about uranium supply and demand and feedstock and enrichment and the like. And so this one we like. And, we're holding out for a larger long-term capital gains. Neo Alternatives is a cannabis and CBD consumer product. We've known the CEO of Neo for many, many, many years, as he's been in and out of various successful ventures. The play on Neo is as follows. Neo is a Massachusetts-based cannabis company. And so the speciality around cannabis is this idiosyncrasy where it cannot move across state lines. So it can be legal in certain states, but cannot be moved across state lines because that is against federal rules. So what Neo has done is basically going to be the middleman, establish licenses in Massachusetts, build out manufacturing and distribution, and essentially sign licensing agreements, which they've done with brands to say, let us manufacture and distribute product for you in Massachusetts where it's recreationally legal. They are very close to their receiving their licenses in Massachusetts, and it's a long process in Massachusetts. They have heard back from their initial license applications, which is a very promising thing, and they've got a phenomenal team associated there. So this is one that could be very well be picked off by a multi-state operator, or they may receive the license in a very license-restricted state and decide to sell the license. So we'll see what happens. They've also developed a CBD brand, literally whilst they've just been waiting on the licensing process. So there's a lot of regulatory idiosyncrasies, arbitrage capabilities that one can achieve through the different states, and Neo is a play on that. Cygnus Capital is a local Atlanta-based firm that focuses on non-performing loans and real estate debt investments, specifically stressed debt investments, run by a gentleman by the name of Chris Swan. And they're on their fourth fund, I believe. They've deployed over 100 million. So it's fairly small and niche outlook. So what we like about Cygnus specifically is they really are specialists in getting involved in situations, and I like this little decision tree. So they are paid to resolve uncertainty, if you will, and so that they basically finding loans or distressed situations, and then they decide, can they restructure or modify the debt? Should they foreclose the debt and go for the collateral? Should they monetize the investment via debt repayment? Or should they stabilize the asset and look to sell it? So they've got a great working team that can look through all the potential options and go through the lowest risk, highest payout type option. They're very well versed in all different debt instruments, as you can see over there. And again, they're playing in an inefficient market, limited buyer pool because their transaction sizes are actually relatively small relative to some of the other real estate distressed behemoths out there. And again, just good, solid credit work, credit guys. At this moment, they don't only have properties in the Southeast where we are, but they're really focused nationally, so all of the U.S. presence. So we like these guys. We think from a macro that we may be approaching a bit more of a distress cycle, and these would be our go-to guys in the space. And lastly, full disclosure, GNR Partners is my own fund. I have partners in this fund. It's a cannabis-focused fund. We are on our second fund, and our first fund was a great success. Lucky or smart, as I say in the business, one never knows, but it was a great success. And on the back of it, we have looked to create a bit more of a diversified fund for GNR Fund 2. Let me show you some of the areas that we can add value. So again, the cannabis space is highly fragmented, highly regulated, and a lot of arbitrage ability right now, and obviously that kind of irons out over time. So where we are trying to exploit market inefficiencies, certainly on the cost of capital, traditional financing options are not really available to a lot of places. Certainly debt financing is not allowed at the moment. And again, you would see from our portfolio company, Neo, that we like to play in the middle. So we're not really in the cultivation space, and we're not so much in the retail dispensary space. We're in the manufacturing, testing, packaging, distribution side of the business. So kind of the logistical in the middle side, which I think of akin to the belt, the pickaxes and jeans type business. Spoke about regulation being highly fragmented. What's happened is because of the fragmentation, you've had groups that have really built out from seed to sale infrastructure. So they'll grow, harvest, extract, manufacture, distribute, and dispense all along their vertically integrated business. Now they can't be master of all, as we know. And so there's a lot of idiosyncrasies, there's a lot of inefficiencies to be the operator in certain areas. Legal complexity goes without saying. Every state has got some different quirk to it, and that allows one to understand, perhaps even predict trends. And then we speak about hemp, which is CBD. That is a whole different, that's a whole different animal. So also from a legal perspective, there's also what's known as 280E tax code provisions. Basically, because cannabis is still federally illegal, a lot of these businesses cannot deduct any expenses against their revenue, and so are very highly taxed. And again, that's one to look out for, because when, and you notice I say when, not if, there's some federal legalization, that will normalize, and there will be a bit of a bonanza to some of these companies. Operators, business expertise. We are not operators, but we know a lot of people in the business now. We're well respected in the business, and we know a lot of professionals as opposed to early stage people looking to get into the business. Again, we've been in the business for 3-4 years now. We know a lot of people, a lot of operators. We know who are successful and who are not, and we have access to terrific deal flow and access to good talent pool. So that's it, folks. That's the 5 Investment Friday. Just a synopsis of what we're looking at and what we like, and I hope you enjoyed that. And if there's anything you see that's of interest, feel free to reach out to me at Silberman Gregory at Gmail or on LinkedIn as well, and we can certainly get you hooked up and get you learning a bit more about all of these things. Thank you. Have a great Friday. Take care. Bye-bye.